Understand what probably can happen today at the release of non-farm payroll, I looked into previous economic data, primarily the data which affect employment sector. So if we look at PMI's number are in expansion territory and they have come pretty close to the forecast. However, if we look at employment component of PMI's, services PMI's employment component seems to be improving from 45.2 to 48.2 in last two releases, but employment component of ISM's manufacturing PMI declined in last two releases from 48.7 to 46.4. However, service sector is more important as it is the bigger part of the economy. So overall result should be considered improving for the employment sector. If we look at JOLTS, which is a leading actor, a leading JOLTS jobs opening, which is a leading indicator for job sector in the US, we must look at the second last data to understand what probably it may have affected the employment section. So the second last release, which was done in the previous month, not this month. So second last release was 6.88 million, which actually has been revised up to 6.92 million, which has showed improvement in jobs opening, which also is a positive sign for employment sector. Other data which are not directly related to employment, however, they are contributing into the economy are home sales, ADP, NFP, and they both have come pretty close to their forecast. So I don't see any significant reason to expect negative surprise today in release. However, we will make a plan in case of negative and positive surprise. What is a negative surprise? Let's define this first. Negative surprise should be at least 50K negative deviation in non-farm payroll from the forecast. So let's say forecast is 65K, and if it comes to be 10K, 15K, then it will be a negative enough deviation to be called to have a various impact on US dollar. And out of three economic data which all are going to be released today, we have to focus only on two. One is average hourly earning and non-farm payroll. So I told you the deviation in non-farm payroll, but the deviation in average hourly earning, which may have an impact, should be at least 0.1%. In simpler terms, 0.1% deviation in average hourly earning and 50,000 deviation in non-farm payroll will have similar impact, which is why we shouldn't get any contradiction between these two data to have a direction in US dollar index today. If we see neutral, if we see one data coming neutral, another coming negative, it will be called bearish USD. Both negative will be significantly bearish USD. Both positive means significantly bullish USD. At least one positive, it means one better than forecast, will be simply bullish USD. If these two data will contradict, then it will be not tradable economic data. So now let's go to the chart. I'm not going to the chart right now. I'll simply tell you the level which you can trade. After comparing Euro, Pound, and Japanese Yen, since the beginning of April, we have found out that the Euro and Pound has been the biggest gainer compared to the Japanese Yen against US dollar, which is why if we get negative US dollar, we will buy either Euro USD or GBP USD. However, after comparing Euro and GBP on the chart of Euro GBP on daily time frame, it has taken the support third time from the same level where it took support last two times. And since beginning of April, Euro GBP has been falling down, which has taken support, which is why Euro may be expected to rise against Pound at least for intraday, which is why Euro USD will be the best pair to buy in case of negative US dollar. Significantly, negative US dollar will give us a target of 1900, 1.1900, which is 127.2% extension level of the recent retracement on daily time frame. However, simply bullish USD in case of only one positive data and another one is neutral. Sorry, one negative US dollar data and another one is neutral. Then we will get a target of 1850, which is last swing high. On the other hand, if we get one positive data, another one neutral in US dollar, then US dollar will be bullish and we will buy USD JPY targeting 157.90, which has been the last swing high on daily time frame. If we get both data positive, which will be the significantly bullish USD, we'll get a target of 158.65, which is 50 days moving average. That's all for trading non-farm payroll today. Thank you for watching.